We'll kick it off 1 minute early this evening. Might as well. I've basically been on here for the last hour conversing with the crowd. Good evening to everyone. Before we kick it off this evening, we'll give it a few minutes for some folks to make their way into the group. Obviously, you know, the topic of the evening is going to be volatility, risk tolerance, certain things that anybody who was invested in the stock market this week had some experience with. Some of the folks that were probably not involved in the stock market were probably glad that they weren't. I tend to look at it a little bit different. And for those that are joining the live stream tonight, I think it's going to be extremely beneficial for you guys to understand my perspective on how to deal with the stock market when it does this. I've rolled out a new feature on the Independent Investor channel. I've been really searching for ways to be more transparent with the community. I really think that I try to define a two-way road on the Independent Investor channel with regard to the community questions, the needs. Everybody's coming from a different perspective. There's a lot of new investors in the group. There's also a very robust group of folks that are in their 50s, and that presents a whole new suite of needs and questions that really need to be answered, because we've really never been in a situation like this before, where the stock market has run up so far, so fast, that there's a lot of people asking me questions about what to do with their retirement account. You know, should you take and safeguard some money? And I think you guys really will be surprised at my answer. Remember, the difference in fundamental philosophy that I bring to the table is to use the stock market for what it is. All right. You don't need to marry the stock market. OK, we don't need to marry a stock like Google or Amazon or Apple, indefinitely. All right. We use it to get us where we need to go in way of our financial goals. OK, and each individual investor needs to define those goals before they invest one penny in the stock market. I teach along these fundamental premises because that's what's going to keep you grounded when you go through volatile weeks like this. And I actually think that this is going to be a fairly short-lived adjustment back in the stock market. But to provide you guys a little bit more clarity on the channel, I've just stood up the Instagram posts. I'm going to try to be offering a daily quick 1 minute synopsis. And each day, I have a thought about what's coming up, a piece of, information that's come through in the stock market that I feel relevant. Okay. Now make no mistake, I'm not going to be regurgitating news that you can just go online and find just as easily yourself. Okay. But it is just another avenue for me to get my thoughts out there and get it to you guys to provide a little bit more transparency about what I'm thinking on a daily basis, or at least every other day. I'm kind of toying with the notion of just doing a 1 minute upload every now and then, just to throw it on there to show you guys what my thoughts are with regard to, and also to reemphasize some of the investing themes that I talk about all the time. So please, I would ask this group, I will lean on you guys to go on there and check out my Instagram. Definitely want to follow the Instagram feeds because that's going to provide my informal message to you guys every day. So just another favor that I ask of you guys, again, free of charge, right? None of this information is worth, worth charging folks. And it's just another way that I can help you guys maybe stay a little bit grounded. If you're looking for a little bit more support, you've just started in the stock market, it's really important to have those validations, because you go through weeks like this and you start second guessing yourself. Like, why am I doing this? What's going on, Ryan? You got me started in the stock market, and I get a big dip in the stock market. How should I react to that? And those are some of the lessons that I'm going to go ahead and put through on maybe, how I'm looking at, my particular money, how I'm dealing with it. You guys have to understand, I've been through this before many, many times. So I don't tend to get overjoyed. I could get on here and just say, oh my gosh, the stock market is, crashing, and that type of scare tactic for people is not in line with any investing fundamental philosophy, nor does it teach people how to react to corrections in the stock market at all. And you will never hear that from me. I don't care. I'm, long term on a lot of my positions. I am short term on some of my positions as well, turned long term, mind you. I probably bought, some of the technology stocks at some of the wrong time. But I did scale into those positions. I had some positions in Google and Amazon that kind of bit me this week. That's fine. I just get long the stock, and we live to fight another day. So that's kind of what we're going to get into this evening. I want to welcome everybody that's part of the community. A really robust group tonight. I was kind of disappointed with last week's live feed. We had some technical difficulty. I do apologize again for that. I do want to point out, I've come to know Lydia Santiago is in the group as well. I always call out the channel creators. Lydia's over halfway to monetizing her channel, and I give kudos. The scary part about YouTube, honestly, is where this thing is going to go in 5 or 10 years. So definitely don't want to be short term in our application and generating a discussion about, the stock market. I did go on to her channel, check out her content, and I think she's delivering a niche that's probably going to get people excited about investing. And at the end of the day, I can really relate to that. So she's been one of my featured channels. I just added her this week. I've got Benjamin Levy as well. So he's probably the youngest YouTube creator that I know of. So also reaching out to a group of investors who I feel like is probably the most important group to get across to. There's way too many options out there for young investors, and there's no excuse as to why they can't start to internalize some of these fundamentals. I'm Benjamin Levy. We were just talking before the live feed. And I think he's probably got a hand up on a lot of folks. There's no better time than to start educating yourself up on investing principles and, seeking out long-term growth, because certainly time is on your side. I did also have Brent in the group here as well. He runs the Financial Investor channel, good friend of the channel for a long, long time. And I do want to make those shout outs. If there are any more channel creators in the group and I have missed you, please catch my attention, because I always try to give those shout outs to you guys, try to help you build your channels the best you can, as I'm trying myself to build my channel and push my message out to as many people as I possibly can. I do see Jared Odell, great friend of the channel, really an administrator in my Facebook group. I can't thank him enough. Very, very savvy investor. And this is one of the cool things about social media. You guys need to understand as well, up until a couple years ago, I wasn't on social media. I didn't have a Facebook account. I did not have a YouTube channel. And it all kind of happened at the same time. I knew the power of social media. I really did, but I just did not have a reason to exploit those avenues. And now I love it. I really do. It's a great conduit to get a niche message out to the masses. It's very, very simple. And through doing that, you can have some preliminary folks hear your message, resonate with it, and then share your message and pay it forward if they do believe your message is credible and can work for folks, which mine absolutely can. I do kind of want to talk a little bit about emotion and stocks really quick, and I don't want to belinger a point on tonight's live feed. Interesting enough, the last couple days in the stock market did go down over the last couple days, and if you guys want to know, I can kind of portray to you what my emotion was over the last couple days. So I'm going to give you my impression of how I approached the stock market over the last couple days, so bear with me. So when the stock market does end up getting violent, it's amazing to me how I see a lot of YouTube channels talking about, the end is coming, the stock market is crashing, It's amazing to me. Media feeds into it as well. They get every bear, that they can find and talk about doom and gloom in the stock market. I find it funny. I found it funny for the last 25 years. And just here recently, I've really taken a little bit different approach in that when the stock market goes down, I tend to become a little bit more relieved in that I know that every day that the stock market goes down, you're going to be presented with your opportunities for better entries into certain stocks. So if you guys were looking for an entry into a particular stock, I actually bought a few names today. I will be giving you those stock picks later on in the video. So for you guys that want to understand how I took my first $1,000 earnings from YouTube, I've started that portfolio with a 5-stock position, so you guys can benefit from that. But I want you guys to really understand with the fundamental premise that emotion has no place in stock investing. It doesn't. And it's the hardest, simplest rule that you can ever abide by, ever. Because people hit me up all the time and they want to talk about, oh my gosh, the volatility's up, Ryan, what do I do? I don't know, same thing you did yesterday, And it's one of those things that a lot of people don't want to hear when they see their hard-earned money coming back. And my first Instagram post spoke to this, right? If you're looking at, and you're a young person and you have $1,000 and that's all you have to your name, you've saved this $1,000 up only to subject it to risk in the stock market, and you watch that $1,000 go from $1,000 down to $800, you're down 20%. That's a big haircut, right? And it doesn't mean that you're right or wrong in your approach. It does, however, mean that potentially you've overexposed to the stock market. Now, this is relative across the board. This rule can apply to anybody. All right. If you've taken $10,000 of your hard-earned money and you've subjected it to the stock market and you've watched it go down the last couple days, which 1 or 2 days in the stock market means nothing. Zero. It doesn't mean anything. And I know we're going to generate some discussion tonight about everybody talking about the volatility, but really let's try to keep it into context, because a 1 day, 2 day snapshot in the stock market really doesn't mean anything at all. And it really shouldn't mean anything to you guys when you're looking at your long-term plan and your portfolio is built to weather a downturn that the stock market can throw at it. And I expect any portfolio should be able to be subject to, a 50% downturn, and you guys are able to acknowledge the downturn and profit from it. That's the most important thing. All right. So when you guys are looking at what the stock market does for the last couple days, that's an opportunity for you to look at your own personal risk tolerance in the stock market. And if it affected you at all, you want to make sure that you're not overexposed to the stock market. All right. Now, if you're a young person, I'm going to tell you, you can afford it. Okay. So don't get emotional about stock if you're a young person and you're tuning into this live feed this evening, because young folks, you can take on risk. All right. You can even take on some riskier positions. Honestly, it's okay. And the quicker you get your mind wrapped around that fact, the better off you're going to be long term. In that some of those risks, yeah, they might fail, but they may succeed. Okay. And that's only going to accelerate your ability to get your nice passive base in place younger in life than later. So again, guys, I want to welcome everybody to the group. I do have an agenda this evening. We're going to touch on some 401k positioning. And also, I've been getting hit up by one of my most popular videos is investing later on in life. For those of you out there who are 50, 60 years old, we're certainly going to talk about some of the themes that I've got coming through the channel with regard to some of my older folks that may be approaching retirement age that are sitting on a very sizable portfolio, is it worth it to look at maybe doing some defensive positioning? And we'll kind of get into that. But I want to touch base with the group here and see if we've got any questions in the group, and I can help to try to facilitate some of those discussions, and we can kind of get right into it and start kind of talking about it. I will start off actually with Doug Whitaker in the group. Really doesn't miss a discussion. I really thank you. I look forward to this discussion, and keep in mind, I learn just about as much from you guys as you do from me. But it's all about hearing different perspectives on how we kind of deal with things. The market's been crazy for the past few days, but he talks about oil's been moving up again today. And I do want to premise the importance. I actually did notice the move in oil, but if you guys paid particular attention, you would have noticed the move in utilities as well. And this speaks about the importance of trying to dabble in different sectors. And I don't use the word diversification when I talk about single stock allocation. All right, it's impossible to diversify when you have multiple single stocks. And I don't care if you're buying one share of 50 different stocks, you're still not diversified, okay? The only way to truly diversify in the stock market is to either buy an index fund or buy an ETF. You guys know that I prefer the ETF route. I just don't see a whole lot of difference to pay up for the index option as opposed to just going with the comparable exchange traded fund within the same index you're looking to mirror, whether it be the S&P 500 or the Russell 2000 or even the Dow Jones. Now that's only going to diversify you across 30 names. The NASDAQ with the QQQ, okay, you guys understand what I'm talking about. But I did see the move in oil. I've taken ExxonMobil into the trenches, and you guys are going to find that it's actually a lot easier to take these big blue chip companies into a downturn. And I've taken ExxonMobil into the low 70s. Here it is in the mid 80s, and it's going to 100. I mean, it's paid me a fat dividend this entire time. But I'm sitting on a nice sizable position, 50 shares in ExxonMobil. And I think oil it's been in favor for a while. It's been trending up. So this little uptick in oil over the last couple weeks or so has been a nice breath of fresh air as far as I'm concerned. I'm a big oil holder. I've got Royal Dutch Shell, I've got Chevron, and Exxon. So kind of the big boys, Royal Dutch Shell, I do like for my overseas exposure. And then I thought I had one more oil stock, but I don't think I do. I think I took a short trading position in Pioneer Resources, and I did sell out of that for a profit, of course. But those are my three major holdings. So it's a great point, Doug. I appreciate your offering there. I've got some of the other groups in here. If you guys have any questions, please throw it in the discussion here, and I can try to touch on some of those. I wonder, is this a good time to buy Tesla? I've got Mystery Queen 86 on the line who's talking about Tesla. I think it's in real trouble here, actually. This is my opinion. And if you guys are looking for a value play, I'm not really sure why General Motors isn't coming up in the discussion, honestly. I was just having another discussion with General Electric, which started to move up. And that, from a contrarian perspective, how could you feel that General Electric hasn't already been washed out? Thank you for the tip, by the way. That just makes my night. That's very cool. So I really appreciate it. But, General Electric, I did take another small position in General Electric here. But if you're looking at an automotive investment, I would look no further than General Motors right here. It's been kind of on a downslide into the low 30s here, and I would pick it up. It's a great dividend holder. It's a great company, great fundamentals. I think Tesla's in real trouble. I really do. I could be very wrong on Tesla. I don't know. Somebody could come in. It's a very volatile stock, one of those high-profile stocks that actually I'm surprised, or I'll surprise my community, that I've never bought before, even on a short trade. I'm just not interested in the stock at all. And I would warn anybody out there, You wouldn't want to be looking at a company like Tesla in lieu of some of the other great names. I'm going to be working very, very hard to provide my very best 10 dividend stocks that I own. And this is going to give you some insight on the core dividend holdings in my portfolio this week. I find a lot of value in doing that. You guys can kind of understand, why I find value in a 3M, why I find value in McDonald's, why I find value in a Pfizer, just to give you kind of an idea of some of the, big blue chip companies that are just boring as hell to own, but they make me money. And that at the end of the game, I'm not looking to buy stock just to buy stock. I'm looking at it to make money over the long term. So Pfizer's been on a tear. Healthcare, I would throw into that. Also with telecom, you want to look at AT&T. AT&T starting to move north now. So I think there's kind of a secular shift going on from some of the higher growth names. I don't think there's anything fundamentally wrong at all with Amazon. As a matter of fact, I think I know the community knows that. But I just think while this money is rotating from Google, Facebook does have other issues as well. And I said that it was going to the low or to mid 150s. It just is. I don't think they need to make some moves to shake off some of these scandals. But the thing about it is Facebook really that much different of a company now than it was 2 months ago, up over $200? I think not. So this in time will pass as well. I've added to my Facebook position. You guys do know that. But some of the rotation that's happening in Google and Amazon as well has shown in the stock price over the last couple days. And I know Lydia is also a shareholder in Amazon as well. Certainly that can be a long-term holding for you, as it is for me. So I wouldn't bat an eye. It's no problem. As a matter of fact, if it comes down far enough, you want to be looking to buy that. It's just that, at $1,800 a share or $2,000, it's been in around an $1,800 to $2,100 trading range. That's a lot to pay for a stock. It really is, especially with such a high multiple. If you guys didn't catch this week's breakdown of JD.com, you guys need to catch that. Ryan Scribner did a fantastic job breaking down JD.com, dispelled a lot of notions, actually. The guy just did a sick amount of research, no doubt about it. I gave him kudos for it, man. He deserved it. He's throwing down some quality content, quality. And I know Ryan personally. I know he doesn't invest his money into stuff that he just willy-nilly throws at it. Based on that, I've actually upped my share in JD.com. So just to kind of let you know, that piece of product is out there. If you haven't caught it, kick over to Ryan's channel and you're going to want to catch that. It's a good breakdown of JD.com. And I know there's some folks in the group here who are also into JD as well. But I just purchased 71 more shares, put me at an even 100 shares now in JD.com. It was just way too tempting at this price point. I mean, I've traded JD in the 40s. Here in the low 20s, it's a bargain, especially if you're willing to go long the shares. So kind of want to get to some of the group here. Happy Friday. I've got Avi A. I've got Becky in the group here. It's really good to be offering this to you guys as well. If you guys made any moves in the stock market this week, I'd certainly like to see those declared in the community here. I'm scrolling through here. I did have a great discussion with Lee Nguyen as well, and we are going to be getting into kind of a 401k discussion as well for you folks that are holding sizable positions in the 401k. What you can do to maybe safeguard some cash, put some cash to the side a little bit while keeping some of that cash working, as well as the thought of maybe starting a new account and starting to build that from scratch while the market is still high. You can kind of start on the ground level with a starting entry position and build that up over time, assuming that the market may end up correcting back a little bit. It's a great time to do that. So I've got Jersey Philippic in the lot. It's great to have you in the group here. Man, greetings from Chicago. That's awesome. I used to live in Little Chicago. That's Detroit. So I got a special place in my heart for Chicago, man. I really do. Awesome city. Awesome. Greeting Ryan's from Texas. Used to live in Texas too. And you guys must think I just have lived everywhere, which I have. Absolutely. I had Houston, Texas was my home for a while. So very cool to have you guys on the line. I've got Lydia, thanks for asking. I've got Noella on the line here, good friend of the channel, no doubt about it. Just it's awesome to see you, and thank you so much for your support. I will address Noella's question. I'll skip over. I'll get to Captain Dunzo next. But I bought FUN and VT this week. Thoughts? I think that's really good. I think that's really good. Just be kind of careful with making your buys with the stock market in its current position. Make sure you take advantage of any positions that you're up in right now. You could look to kind of safeguard some cash. But I think you're good with those positions. You're such a savvy investor. I think you'll be able to make those decisions and benefit from them because you're so smart in that you know the value of value investing and getting involved in positions that if the market does end up taking a turn back, and this is my approach for a lot of people who are sincerely reaching out to me and asking me, Ryan, what do I do? This market's really spiked up and I'm, what do I do? Should I take some money off of the table? It's really interesting to hear some of the perspectives from some of the financial planners who are getting hit with this question, and clients want to take some money and put it on the side right here. And some of the reaction from some of the financial planners is really interesting. A lot of financial planners are kind of like, whoa, what are you doing? You got to stay long in the market. Well, until when? You know what I mean? Didn't you get invested for financial security in your future? If you're sitting on a good amount of money and you're in your 50s, are you going to be able to subject that money to a 5 to 10 year bear market? Who's to say what's going to happen? It's easy to reflect on past performance and say we've been on a 10-year bull market. My money has appreciated because of it. No, I think those stocks are fine. I think you'll be really good with that. I will jump up. I've got Captain Dunzo there. Hey, also my good friend, looking into Boeing. That company itself has done well and has grown into dividend and profit on an upward trend. Boeing is best in breed. Boeing is a cornerstone of any portfolio. If you want to invest in Boeing, do it. You missed your entry point at 325. It really got beat up there for a sec and really gave you a quick, brief entry point to the stock. And now I believe it's back up above 350, if I'm not mistaken. Boeing, I don't currently own. My industrial holdings are pretty diversified. 3M, GE, United Technologies as well. Of course, Lockheed Martin I really like. I do have Northrop Grumman in the defense sector. We were just kind of talking about that before, but Lockheed Martin is a buy. I love Honeywell. Honeywell's a buy. So any of those good companies you could invest with. If in fact you're looking for some exposure in the industrial sector, those can meet those needs in any portfolio. It doesn't meet the needs in every portfolio, but it can. They're fantastic companies. And if you do have that need in your portfolio where you're looking to beef up the industrials exposure a little bit, those stocks right there can kind of get it done for you. So hope that helps you. 261 for Tesla. I agree. David Mathis says, hey, investors. Oh, that's the idea. A lot of what we're trying to do, you are welcome, Noella, anytime. You can hit me up with those questions anytime. I'll answer, give you a straight answer. Pepsi is a buy right now. Yeah, it is. I just scrubbed a bunch of profit, left it on the table, which I was fine with. Pepsi is one of my long positions So I don't really care what the stock. I'm kind of addressing a comment from Jared Odell right now. Pepsi is a buy, and Pepsi is one of those stocks that really could fall on my list of stocks to own forever. Now I know Procter and Gamble has been on that, but certainly you could go with Pepsi on that list. I do own Coca-Cola as well. You guys know that, but if you guys were looking at an entry into Pepsi, guys, I mean, I would have recommended at 114. It's been to 124. It's at 104 right now. So if you were ever looking at getting into a position in a nice beverage, now Pepsi is a little bit more diversified across their product offering than Coke, but Coke's got a fat dividend. I'm fine. I split them between the two accounts. I own them both. Why not? They're fantastic companies. But if you guys were looking at that entry, thank you so much for that Boeing 386. I pay attention to the stock market every single day, and I thought for sure it was well over 350. I've got it in the community there. It's at 386 right now. So, you know, it's run up significantly, and I just, you know, if it's going to start tipping back with the rest of the market, it's not going to matter how good the stock is. So. Yeah, Pepsi's a good buy right here. I would definitely take it. Oh my God, that's insane. That is a huge spike up. It is. Boeing does not give you very much opportunity. One of those woulda, coulda, shoulda stocks for me, just like every other stock in the stock market. And if there's anything that I can impart to the group here, you guys understand I'm 41 years old. I've been investing in the stock market for 25 years. If there's anything that I can impart to a young investor that's looking at me saying, teach me, Ryan, it would be very, very simple. It would be buy and hold good quality stocks for the rest of your life. If you look at the long-term or historical rates of return for some of these good companies, you guys have got to understand, man. I mean, it's up into the thousands of percent for some of these good quality companies. And if you're owning a stock for 5, 10, 15, 20 years, think about how many dividends are going to be paid to you over that time frame. Typically, people, you know, they want to buy in and out of stock. I'm guilty of it, just like anybody, because I'm trying to accelerate my year-over-year earnings, right? So I've sold a stock for 3 or 4%, right? If I'm up in a stock, I want to sell and I want to free up some cash, I do it. All right, but honestly, the best way of gaining wealth or earning wealth or building wealth in the stock market is to enter into some of these good quality positions like a Pepsi, and you've got a pretty good entry here into Pepsi, you know, buy a small position. All right. I'm going to kind of tell you guys what I've done for portfolio building in my positional $1,000 portfolio that I just built today. And it'll give you guys some example that I don't mind buying 5 shares of a stock. So for you guys that are just starting out new in the stock market, don't think that you have to buy 100 shares of every stock out there. You don't. Start with a few shares. Get your feet wet a little bit. Play with the functionality within your brokerage account to set up, or your retirement account to set up those dividend reinvestment features, and watch yourself be paid a dividend. All right. Have you ever caught a big halibut in Alaska? It's awesome. I ask the same question of, have you ever been paid a dividend? It's an awesome feeling. It's just about as good as free money as you can get in this life. And there are very few things that are free in this life. So it's very, very cool. I appreciate all the questions tonight. I'm going to try to run down the list here. I've got Sarah Logston, who's also a very, very loyal community member here, and I definitely want to get back with Sarah. Got back from the Oregon coast, and everything was red on my phone. I would like to see things go south for a while. It can or it can't. It can do whatever it's going to do, you know, and this is why I talk all the time. If this stock market goes down 20, 30%, you guys will not find me coming on the Independent Investor channel and apologizing one bit. No way. No way. It does no good for me to come on here and talk one game out of one side of my mouth, right? And then come on here and act a fool because the stock market's down 10%. And honestly, I could care less. It's hard to watch my money go down. Great. but it doesn't mean that I lose sleep over it. All right. And another thing that you guys can kind of take away from the way I deal with, okay, the stock market's down today. You know, I really don't fret anymore, but I know that a lot of young investors do. It does impact you. All right. I know that because when I first started investing in single stock, I was so excited. Emotion, right? It went up. I was excited. And then it went down. And I'm mad. All of those are incorrect impulses when you're investing in single stock, every single one of them. So much of what I teach upon is scale into the amount of risk tolerance that you're willing to put toward risk. All right. And that's why I use the $1,000 analogy all the time. If you're a new investor and you've got $1,000, but you think it's gambling and you know how important it is to invest in the stock market, but you don't want to lose it all, take $250. Invest $250 and put $750 on the side. Now that's a radical example to somebody, but it goes to prove my point of if the stock market goes down, 50%, and you now only lose $125 instead of the $500 of the original 1,000. You guys see my point, right? If you're going to lose sleep over your investing perspective, philosophy, and plan, then scale back. It's okay. All right. It's okay to scale back and introduce to the stock market the level of capital that you are comfortable with. No more. That's it. You don't have to overexpose to the stock market. All right. Let me get to some of these other questions in here. I would like to see it go south for a little while, Sarah, but I would like to use your question to piggyback off of something else I would like to talk to the group with. And this is something that I talk about all the time, in that if you have a passive ETF that you never ever sell, that right there in and of itself is kind of a barometer to read and pulse where the stock market is. If you're down 10% in your ETF, or you're down 20%, or down 30%. Now, this is a hypothetical example, guys, but remember, you're passive on your ETF program over here. That might be your time to say, okay, my barometer is telling me that the market is down 10%. Maybe I want to allocate a little bit more lump sum payment to that ETF, right? Which is exactly what I'm doing. I'm using I have a TSP, okay? You guys know I don't have a 401k, I have a TSP, which is basically the equivalent of everybody else's 401k, all right? But I use that account 100% passive, 100%. I don't finagle with it. I don't mess with it. I dollar cost average it like a good savvy investor should, and I leave it the hell alone, okay? Now, I do that with a portion of my stock portfolio. I do that with a portion of my bond portfolio, all right? I do not do that with my trading positions, all right? So I have a lot of different pillars in my portfolio that I treat completely different, and I don't muddle them together. I don't, all right? But that's what some of those passive positions can mean for you, is to give you a very, very consistent barometer of where the stock market is at any given time, okay? You can take your foot off the throttle when you think that it's getting hot. You can add to it if you feel like it's going down 10, 20, 30%. You see how it kind of gives you an idea of how you can take advantage. So I really do love that comment where you say, I want it to go south for a while. That's exactly how I feel. It is. Now, I don't want to watch my money go down, okay? Remember, this is the money game. I'm not in this to be an investor just to say I'm an investor. I'm doing it to secure my financial future. However, you also have to be realistic about what money is going to do when it's introduced to the stock market, and this is completely, completely normal, all right? I had to break out the tissues the other day. Jeremy was crying about the jabs. Oh, yeah. Yeah. So he panicked out of Tesla, and then it went up $50 a share the next day. So cry me a river, honestly. I just think that type of thing, like, I mean, you can't too much portraying over a social media platform that emotion has everything to do with your investing perspective is wrong. It's wrong. All right. So you heard it here first, guys. And a lot of you guys know that. You really do. A lot of entertainment value, certainly for a lot of people. Me, no. It doesn't entertain me at all. That's why I don't watch it. But my problem that I have is that a lot of that emotion that comes through in the content and delivery seemingly endorses being willy-nilly with money, man. And I guess if you're making that much money, every month, I guess you can be willy-nilly with money. But I guess my separation of the earnings that are coming through on YouTube and the money that is being made from investment capital, real money that is generated from investments, that's what I would like to know. And that's not something that he'll ever disclose on YouTube. No way. That's my challenge to him, is to disclose how much he actually started with and not just manufacture a portfolio to tell everybody that he's a six-figure investor. I actually am. So it's the truth, which is typically what I'm more interested in most of the time, is the truth. So I've got Lydia, who's got a comment right in the middle here. That's what I do. I found companies I love and been adding shares as time passes. I have many years to build my portfolio. So what Lydia's talking about there is what I saw when I saw her video on her portfolio holdings. And she invests a lot like I do. Companies that resonate with you, you can relate with. So when they do enter into a downturn, you can still justify owning a company like Visa, right? It's one of the best technology companies out there. And yes, it is technology. Amazon, same idea, right? If you guys are owning a nice sizable position in Apple shares, right, you can validate those positions. I'm a big believer in Facebook. I really am. I'm not one of those folks that just, yeah, they need to protect people's data, but good grief, this is the monster that we created, man. Stop crying about it, Just invest in Facebook. You'll get rich over the long term. I don't know how much more simple I can put it. That's one thing that Jeremy did say, is that it's easy money, and that part I did kind of agree with. It's just in the delivery that I don't like, because people are going to hear that information and they're going to take a big lump sum of their money and dump it all on Facebook. And that's not something that I advocate for. Remember, the growth section of your portfolio should be reflective of what is appropriate for you at your particular age and in line with your particular risk tolerance. There is no compromise on that rule. None. I won't compromise on it. And I just think if you're going to overexpose to Facebook, right now Facebook is around 6% of my holdings. 6. That's it. I could lose all of Facebook and be just fine. All of it. And I know that's not the case. I'm just weathering a downturn right now. And if it goes down much more than this, I will be scaling down again. I'm going to buy it again, because it's just going to continue to provide more of a buying opportunity for us. So Lydia, thank you for that question. That's probably one of the main reasons why I put you on my related channels, on the Independent Investor channel, because I felt like you were offering stock picks that a lot of people, and I would just encourage and charge you to explain that to your viewers as to why you invested in those stocks. I get hit with the question all the time: you doing all the fundamental and technical analysis on every stock that you buy? No, I don't. I don't have time to do that. I'm not a stock analyst. You guys would find it ironic and funny what I do with my real job. It's an awesome job. It's killer. This is my favorite topic. It really is. So being a value investor and even a growth investor in a good, large company is easy. It's not that hard, man. I've tried to scour over, and I could do a perfect technical analysis on a stock. I could have it absolutely pegged, buy the stock, and it'll go down. So Sometimes the very best names in the stock market are the ones right in front of your face. They really are. They really are. You don't have to go very far to look for good investments in the stock market. You really don't. Don't try to overthink it, guys. I've got Becky. What do you think of Twilio? Yep. It's very good. I've kind of held off buying stock right now, but Twilio is in my watch list. I encourage everyone to put it in theirs as well. But Twilio's good stock. There's a lot of stuff that's coming out right now that I'm really, really encouraged by. Twilio's one of them. I like Square. I don't own any of these, okay? But I'm going to run down my list. Roku, Square, some of ththose companies that are I'm going to watch them for a while because they kind of run up pretty quick. Yeah, Twilio's good. It's just, again, you want to make sure that you're not entering into some of these higher growth names at the expense of going through the fundamental building, the wealth building steps that I talk about. And I start all the way back with savings, checking, eliminate debt, get that savings account built up now, right? Shift some investment capital into a retirement account. Start with a passive ETF or index fund. Add cornerstones into your portfolio after you've got those steps done. Guys, I'm building you up for the future, okay? I'm not trying to make a portfolio top heavy with a bunch of growth names in there. And you're going to take a 50% haircut and it's going to fall over because you don't have a good base. All right. It's just like building a house. It's the same thing. All right. You've got to have those fundamental pieces in the portfolio to make sure that it can withstand the test of time going forward. And that's just how you got to do it. All right. So don't look primarily at those names like a Twilio, a Square, or, I like Roku, therefore I've got to go buy the stock at $75 a share. Let it sift out a little bit, all right? And again, don't buy those stocks. Don't buy those stocks at the expense of good quality dividend payers. And there's a lot of them out there, guys. You guys have seen my portfolio, and it's actually grown. I watched Lydia's video, and I actually ended up picking up Visa. I was so tired of watching Visa go up. So I bought 15 shares of Visa. I was just tired of it. So I bought it. So Lydia, thank you. That was your stock pick, and that's what I took. So I'm now a shareholder in Visa. So that's pretty cool. So let me scroll back up and make sure that I'm getting to some of these questions. I've got a pretty good, I've got Greg on the line, man. Thank you for that. I really appreciate the confidence, man. I was looking forward to this live feed, man. I was fired up. I was mentally preparing, this afternoon for this one. I had a lot to talk about. But Lee Wynn hit me up with a very, very important question. And I don't want to disclose the particulars. He was nice enough to disclose the particulars in the community. So if you are interested, you can go back and look at those. I don't have so much of a problem. And I don't think because he shared, what we're looking at there, what my perspective is going to be with someone who is in their mid 40s and a spouse in their low 40s in this current market condition. And the question came up, does the 401k allow for a cash option? And it sure doesn't. It doesn't. Mine allows me to shift from more of an index type of a fund into like a bond account or a fixed equities account. All right. It's easy to do that. But 401ks in general, I find that people either have invested in what their employer has invested them in, or has just kind of thrown their hands up with regard to all the options in the 401k, and they don't know specifically what they're invested in. They just know to fund it. They know to take their free money. And now when they're sitting on a good amount of money, they're wondering if it is time to safeguard some cash, okay? Now, keep in mind, this decision that you guys make will need to be done jointly. Okay. And I only say that because you disclosed that your spouse, I've dealt with spouses and they work together on their money. They work separately on their money. I don't care what your program is, but if you do make your decisions collectively, I do want you to think about one thing. $170,000 is an excellent, excellent start at your age. Okay. Now, if you wanted to take a percentage of that money and push it over into the bond exposure, you can do that, all right? But you actually talked to me about what your allocation is at this point, and I think you're spot on. I think you're right. What are some of the defensive positioning things that I wasn't going to type out when we brought on for the for the pre-party before the live feed? But some of the options that you could think of is to start a self-directed Roth IRA account for both you and your wife. Allow that Roth IRA, allow the 401k to be that fundamental baseline that I talk about all the time. Now you've got 6 figures in that account, so that's an excellent baseline. It's excellent, all right? But now with the market in its high, you've got a pretty good amount of time left to work in the stock market. You've probably got many years to continue to work and be employed. Why not start that account with the self-directed account for both you and your wife and start building that up as well, all right? Because you got to figure, at retirement age at 59, you've got, close to 15 years to build those dollars up in that account. What if you're able to get it up to 50, 75, 80, maybe $100,000 on that account? That's something to, that's not something to shake a stick at. That's really, one of those things to where if you don't make that decision now, you may look back and say, wow, at the time I asked Ryan about that, he said that we should start those additional accounts and start building them up. I really wish I would have done that. Because at that time, that 401k may have turned into, $100,000, $250, $350, $400, whatever it's going to be, but it allows you to stay long on that program and start an additional account that you start building up while the market is at a high, all right? Because you can take that money into a downturn, you really can. And the question that you asked me is, should I put some money safeguard on the side for a better day? And it's really, really hard for me to answer that question in a way that is in line with investing principles, because what I should tell you is that you always want to stay long the market, okay? You always want to stay long the market, especially at your age, because you're still young. But I do acknowledge that if I'm in your shoes and I'm looking at this market now and it's at an all-time high, wouldn't it be nice to take some of that money and shift it into a safer vehicle? Maybe up your bond portfolio a little bit while you start those other defensive moves in the stock market, starting the self-directed Roth IRA, start to build up your cash reserves on the side. So those are all different avenues you can do. And they're all good. They're all good. There's nothing that is stressful about making those decisions. You invested in the first place, and there was at some point in your life when you started with zero, and now look at you. You're sitting on a nice position, and you're making responsible decisions about what to do with what you've built and what you have reaped the rewards of. You made the decision at some point in your life to become an investor, and now look at you. You've given yourself options, and that is a beautiful thing. It's really hard to explain to new investors as to why you start investing, but you, my friend, have actually provided us a great example of putting yourself in a position someday, to maybe diversify, safeguard some funds, start some new funds, enjoy your baseline, run some figures as to where that money is going to be when you do end up reaching retirement age of 60, for example, and those Roth IRAs come eligible, right? So I hope I've helped you. I want to segue into that and talk a little bit to my crowd that is 50 or older. And for you guys that are young investors, you may enjoy my investing later on in life is one of the coolest videos, one of the proudest videos I have online. Because I think it reached a lot of folks that, I've got a lot of people that are hitting me up and they're saying, Ryan, I'm later in life. I'm getting close to retirement, man. I've built up 500, 750,000 in cash in my retirement account. What do I do? And the more I think about this, the more steadfast I am in my opinion in that, is it prudent for those folks to look at pulling some money out of the stock market? It's a scary question. And I want to encourage you guys to maybe entertain that thought for yourself, or entertain that thought if you've got, a parent or a grandparent or whoever that may be in this situation, to where how much is enough? I've got a client that's over $1 million, $1 million. What benefit to keeping that money exposed to the stock market now, as opposed to safeguarding some of it, sleeping easy, taking a nice vacation, and enjoying the fruits of their labor? We always aspire to having millions of dollars in the bank, but is that a realistic goal? I say all the time that a realistic goal is to be financially secure. Well, what magic amount needs to be in that account? What market conditions need to exist to allow that money to be preserved over time, or accumulated over time and then preserved, right? So those are some of the questions that I'm addressing with some of my crowd that are in their 50s, that are sitting on some pretty large 401k holdings. They've put it away and they've forgotten it. And now they're looking at it and saying, good grief, the stock market is at an all-time high. What do I do? Now, if you go into a financial planner and you ask that question of them, I think you're going to find that they don't really care about subjecting your money to a downturn. They don't. How could they, right? In 2009, people were panicking out of the stock market because that's exactly what happens. I think people, for the most part, were overexposed to the stock market. All right. If you're sitting on $1 million, does it really benefit you to have $1 million exposed to the stock market right here at a record high? I think not. All right. And I'm speaking from if I were in those shoes, all right, which I'm not. I'm still building capital in my life. Whether or not I end up at $1 million some days, I don't know. I don't care. I don't think like that. I'm just trying to accumulate wealth and put my money on the best program that I can for accumulated value into the future. But for some of my folks that are kind of hitting me up with this question, hey, I'm 57, 58 years old, I've invested. What do I do now? And my advice is to look at the scary prospect of taking some liquidation right here, and putting some cash to the side. You're a winner. It's as if you're standing at the end of a marathon that you've ran, and they're asking me, Ryan, should I run backwards through the marathon that I just got done running? And my question back is, why? You're a winner. You've asked your money to participate in the stock market for so many years. It's done its job. What more do you want out of that money? Now, I'm not saying that if you kept your money exposed to the stock market, that it wouldn't continue to appreciate over time. I'm not saying that. I'm not saying that if Ryan said, hey, I should liquidate some cash and put it to the side for my own peace of mind, that the stock market's not going to run up another 20%. And then you're going to come back to me and say, Ryan, I left 50 grand on the table. Therein lies the beauty of investing. If it's done its job over the years, I certainly want to open up the dialogue with some of the elderly community in their 50s and 60s that are in a position where they've built up some accumulated wealth over time. And now you're sitting on that wealth and you're wondering if it is prudent to either keep it long on the stock market or maybe take some liquidations. And I can guarantee you what I would do, because I'm one of those guys that knows wholeheartedly that you only live one time. Okay, you only live once. And how willing are you to take your money into a severe bear market? Ask yourself that question. If you're sitting on that $1 million and we enter into a 40% correction like 2009, and your $1 million turns into 600,000, are you going to be able to sleep at night knowing that $400,000 is now offered up to the stock gods? some scary questions that we offer on the Independent Investor channel. However, they are prudent and they are real, and they affect a lot of people out there right now that are asking that very question. All right, let me scan through some of these questions here, guys. I got a killer group, man. Thank you. The success of the channel is based on every one of you guys participating in these feeds. Been going about an hour, man. It actually feels like I've been going for a significant longer. I have not stopped talking nonstop for 60 minutes, man. So hope you guys appreciate the effort. I'll keep going until I lose my voice. I'm thinking of, I want to get Brent up in the middle here. And then I'm going to give you some of the stock moves that I made this week and tell you the 5 positions that I took in my first little earnings on YouTube. It's not a whole heck of a lot. Again, I haven't, it's been a pretty cool project. I've enjoyed the heck out of it. It sure does help if you do start a YouTube channel to not have money as your prime motivator, because it'll humble you. Coming out with a YouTube channel is really fun and enjoyable and fulfilling, as long as your motivations are in the right place. And I think we are, no doubt. So I've got Brent on the line here. Nothing beats the TSP, the miles. And then I've got Brent on the top, 14 out of 64 likes. I guess that's pretty good, I guess. I don't know, hit the thumbs up button. I guess it helps the channel. So I thank Google for providing such an awesome platform like YouTube for me to address an audience, more of which I can speak my message to more than one-on-one, and I do that as well. But I'm thinking of rolling the TSP to my IRA, then IRA to the Roth IRA, but waiting till 2019, as I'll have to pay taxes on the conversion. Yeah, so you need to look into something for me, man. And I don't want you to quote me. As a matter of fact, you can quote me, Brent. But my brother turned me on to this, and you're like family. So you can grow your TSP if you're not, I don't think you're active duty military anymore, but you do have the option to roll into your IRA in a rollover. I don't think you need to take any, you're probably in the traditional if you've served so many years ago, prior to 2012. That's when they came out with the Roth TSP. So if you're aware of that product, so all my money is in the Roth TSP, and I'll be able to roll that Roth TSP into my self-directed Roth IRA account. That's why I'm shooting for couple $100,000 in that account someday, and then I can roll that over into my other account when I retire from, what I do with my day job eventually. But they've got their talons in me right now, which is a good thing. I love my job. I do. It's very cool. That's an awesome point. But that just speaks to my plan as well. And a lot of people don't understand that you can do that. And that's exactly what I plan on doing. I don't care if there's a few $100,000 in there. That rollover can take place with no tax implication for me. So for you, I assume that the way that you ask the question is that you've got some traditional holdings in the TSP as well. I would do that if I was you, especially if you're out. I don't know what why you're holding on to the TSP, because I'm okay with the TSP. I'm way more excited about the the self-directed IRA, even if it's a traditional IRA or self-directed Roth IRA. Either one of those, because the TSP just is what it is. It's consistent. That's about the nicest thing I can say about it. I've got some real criticisms of the TSP as well, but we'll save those for another day. I got Lydia right below you. I love your channel. You're so humble and honest. Yeah, I am. I got some. Wait till you start getting some hate across your channel. That's a lot of fun. I had somebody say I was trumped. I wasn't sure what that even meant, to be honest with you, because I don't portray my political affiliation, nor do I feel like it's important on an investing channel. But I think it was referring to a video that I made the comment off the cuff. And you guys have to realize I don't script any of my videos, nor will I ever. I mean, I have a short agenda. It's an agenda. But I don't script my videos. And I think I made the comment, hey, I could buy 10 BMWs, right? and it came across arrogantly, I guess. And that might have been the comment that was being referred to. But I sat back and thought about it, and I didn't mean it like that at all. I meant it to mean, look, I'm in this position that I am because I drive a truck with 200,000 miles on it. You know, the choices that I make that most people don't make. I see people all the time. They're parked down in the parking lot of this place that I live in right now, where they drive, you know, a $70,000 truck and they don't have a dime to rub together in their savings account. And that's not right, wrong, or indifferent. I could care less. It's just, where do you put value? Where do you put value? Do you put value in things that will appreciate in value for you? Stocks and real estate, precious metals, fine art, vintage cars. That's it. Or do you want to buy depreciating assets? Now, the funny thing about the two appreciating assets that I talk about all the time, I don't talk about real estate very often, but I love it. It's right up there with stocks, if not on par with stocks. All right. Real estate's one of them. Stocks is the other one. All right. Think about this for a second. And if there's anything that you get from this live feed, for you guys that have stuck around, the 65 people that are viewing this live time, I want you to think about this for a second. All right, agree with me, disagree with me. I think most of you will agree with me because this is my God's honest opinion about stocks and real estate. The greed that exists therein in the financial institutions have done everything that they can possibly do to take those two money-making avenues for common people, owning a house, buying stock, and taking money from both of those avenues from the common person. Why do you think I came out with the Independent Investor channel in the first place? It's to direct connect individual investors to the stock market and eliminate the middleman, right? Think about how much interest you pay on a home. When you buy a home for $300,000 and you end up paying $560,000 for that home over 30 years, okay? Yes, there are pay down options for mortgages. If you pay an extra payment, right, every single year on your mortgage, you eliminate 8 years from your mortgage, and your 30-year mortgage turns into a 22-year mortgage. If you don't believe me, check the math. I'm right, okay? But most people don't do that, all right? And we give away the farm on the two best appreciating assets that I know of to recommend to people. And at least on stocks, I can help you. I can certainly help you on real estate. You guys know, if you followed me for a long time and you've picked out the one video I did on real estate where I talked about how I sold my house for sale by owner, one of the best decisions that I ever made. 1.5 months, I made $8,500. It was the easiest $8,000 I ever basically made, saved at closing, right? And just didn't give it away. Give it away. It's amazing how many people I speak with who are comfortable with just giving their money away, right? 3% fees a year. Boom. How much will it make? 3%. It's not that big of a deal, right? 6% of my well-earned profit. I'm the one that did all the work on my house, but I'm going to give away 6% to two realtors that may or may not work for all that money, depending on the price point of the home, right? I want you to think about those things, man. Think about how the financial institutions, whether it be the banks or the real estate agencies or the financial planners, have done everything they can do to take your money, yours, okay? And I'm here to advocate for you guys and let you know that there are actually options out there for you to safeguard a lot of the cash and keep that money on your side, right? And it's just going to help you accelerate your growth into the future if you're not giving away the farm every single day, right? So thank you for that. Sorry to get off on a tangent, but if you guys heard what I said, I dropped a little bit of knowledge for sure. Very cool. Thank you. Thank you for the comment, Lydia. I am humble and honest. I don't necessarily understand. I understand when the channel gets bigger, I'm going to get some hate mail through the channel. That's just part of the gig. I would just say to you, stay strong. That's all you got to do. Do your thing. Don't ever let anybody. And I've got community members that support me too, and that really helps a lot too, man. I just don't understand how people have the time to come on to a channel and hate on somebody. I don't have time to do that, so I don't do it. Sarah's right below you there. My kids' 529 accounts are with American funds, and I think the fees are eating up the profits. Not sure if I can transfer to another company. My kids' 529s are also with American funds. Okay, so I have the exact same thing that you have, and you can transfer that to something better. The 529 is a good option for your kids. It really is. Now, keep in mind, I don't know how much you're contributing every month. I don't do very much, and I'm making them wealthy, honestly. But if it's used for college, it's tax deferred. It's going to be tax exempt if they do use it for college. There's 4 other protected categories. There's 5 in total, starting a business. So it's not just for college. A lot of people don't know that. But if you want more freedom and flexibility, I don't know if I've told you this before. You've hit me with this question, or it was me that recommended the 529. That's a really good option. And I don't think you're hurting at all by holding the American funds. They're actually very highly rated. I'd kind of like to know what they put you in as far as the expense ratio. But I'm currently invested in the American funds, and they've actually done quite well. I do dollar cost average it, and that's another passive investment that I don't even worry about at all. I just fund it over time, and it's done its job. But you know, look at the expense that you're paying in that American fund, and that way we can kind of go from there a little bit. But with what you gave me through the information, I would say hold true on that program. I think so many parents out there don't do anything, okay? And look at you, you've put your kids, you put an account together that's tax deferred for college. That's a big deal. And I don't want to nitty gritty that account when they've got so much time to allow that money to grow, when it's the exact same thing that I own myself. I'm relatively happy. And I think you can too. But if you do want to fire the expense over to me, I'm glad to take a look at it. No problem. You know, I'll take a look at it for you. I have no problem with that. Right below that, I've got Teresa from the Sunshine State. You betcha. I'm 42, recently laid off, walked away with roughly 130 in my 401k. Though I'm laid off, I've still managed to fund my Roth. My concern is how many stocks ETF should a passive investor have? It really depends on what you own. I mean, if you owned Vanguard's total index, you could own one. You're diversified across the entire stock market. You own 3,700 funds. I find this all the time that a lot of people want to own, 10, 12 mutual funds or 10, 12 ETFs, and it's just not necessary. It's not. I would rather see you own a majority of your holdings in one ETF, being the VTI, for example. That's the ticker symbol, and you can look at it. It's returned around 7.5% since 2004, I believe. You could also look to invest a lesser of a percentage in the VOO, which is the S&P 500, but you're going to need to add an additional couple of ETFs to that if you do that. Specifically, a small cap fund at the very least. The VO is a little bit overlapping of the VOO, all right? And we want to try to avoid overlap in that portfolio, all right? But I'm a big fan of single stock investing as well. So if you had the majority of your money in the VTI, I would like to see some of your holdings or net worth in cash right here. I really would. I think $130,000 totally invested in the stock market is pretty heavy-handed right here with the current condition of the stock market. And I would hope for you, Teresa, that you've got some cash built up on the side as well, okay? Maybe now is a time to kind of take some profit off of the table, because if you are laid off, I assume that you're going to roll into another position. But if you're job searching now and you've got a few months of job searching, in the meantime, I'd like you to play the safe route and look to take some of that off of the table. Now, you said that you are funding a Roth IRA. I hope that it is a self-directed Roth IRA account. That is very good. But I would offer the opportunity for you to reach out to me directly. We can speak directly. It's a lot to do through a live stream, especially through text, when I can only talk and you can only type. I mean, I could type at you, but typically I can get a lot more done if we have a dialogue, and it usually takes at least a half hour for me to ask the right questions. And everybody that I've helped through self-direct help, man, that's one of the most fulfilling things that I do through the channel. Completely free of charge, no obligation whatsoever. But I find that in some of these a little bit more complex situations, I would just offer that as an option to you at your leisure. I'm doing one on Sunday, so I would offer that to you to just, keep in mind the time difference. I'm over here on the East Coast, so we've got a 3-hour time difference. But I would certainly love to piece away some time for you and we can speak. You're my age, you're doing quite well, but taking some defensive positioning off the table and reducing some of your exposure to risk may actually help you sleep a little easier at night. And that's, I don't mean to sound cliche at all. I really don't. That's legit. Like, if you think about this stuff too much, then there might be some opportunity there to take some off the table, reduce some of your exposure, but also reduce some of your worry as well about having too much exposed to the stock market, as opposed to taking some of that larger capital, putting it on the side and still staying invested, working on those Roth IRAs and building those up as aggressively as we can, but not subject that larger amount to the stock market. Hit me up and let me know what you think. I'd be willing to talk to you. It's no problem. I have an appointment on Sunday, and I'm willing to do that. I think you'd find it very, very beneficial. So I'm going to keep going. You guys, I'm fine. I can talk finances all night. I'm going to continue to go. We will earmark probably minute 25, minute 30 or so on this live stream. I just feel like there's a lot of value in the group this evening, and I thank you guys for your participation. I've got Eyes of Goat. Ryan, if I'm not mistaken, you have some Blackstone Group in your portfolio. Talk about it for a few minutes if you could. I can. I've owned Blackstone Group for 5 years. My understanding is that they are an asset managing company. Okay, it's a limited partnership. So a little bit different than a stock, and the dividends are paid out a little bit different through Blackstone Group as well. It does carry a higher than average dividend. It'll range anywhere from 8% all the way down to 5%, and it fluctuates. All right. When I am paid the dividend, they pay a long-term dividend, they pay a long-term investor dividend, they pay a short-term dividend. They're all different amounts, but when Blackstone Group pays the dividend, it's awesome. All right. But they have well over $1 trillion in their portfolio. And my understanding is that Blackstone invests in all things asset related, whether it be real estate, property, hotel, businesses, office space, etc. And the team over there, I was actually introduced to Blackstone Group through the Blueprint of America, I believe. It was a book by Rand Paul, Ron Paul, excuse me, Rand Paul's dad, who wrote the book. It was a Stansberry research book. It turned me on to Blackstone Group, so I looked into the company. I invested in it when it was in the low 30s. It went down to the low 20s. And I was like, wow, what a loser. I held the position, and I'm glad I did. I added to the position, and there's some talks about Blackstone Group, and there's been talks for the last couple years about it being extremely undervalued. It trades at about 12 times forward earnings, which is significantly less than its peer groups. And I believe they do somewhat of the same level of business as BlackRock as well. But you know, I see Blackstone Group at some point being well over $100 a share. I really do. And that's one of the positions that I added into my $1,000 stock portfolio. All right. I could talk about Blackstone all day. I have 180 shares of Blackstone, many of which have been dividend reinvested, all of them actually. So I don't know how many free shares of Blackstone I've got over the years, but I have owned Blackstone north of 5 years. And we've got a little bit of a hiccup over the last couple of days in Blackstone. It's down to around 37 a share. I still think it's a buy right here with no problem, just as much as I thought it was at 40. So when the stock market does stop being cranky, it'll continue to go up. But I did enter into 5 shares of Blackstone Group. Doesn't seem like a lot in my $1,000 portfolio. All right. The 5 stocks that I bought 5 shares of Cisco. I bought 5 shares of Mondelez, 10 shares of General Electric. Yes. I bought 5 shares of Blackstone Group, and I bought 5 shares of Pfizer. All right. So that give you an idea about what I entered into to start my business earnings account, my SEP IRA that I just started. So that's what I bought. I just started that today. I figured I might as well take advantage of a little bit of a dip in the stock market, and I did just that today. So thank you for that question. Very, very cool. I appreciate that. Eyes of a Goat, awesome question. I'm glad to own the stock, and it gives me a little bit of peace of mind knowing that I have a stock in my portfolio that basically pays a 7% guaranteed dividend and is a limited partnership that gives me the prospect of some capital appreciation. Guys, I will let you know right now, for you guys that have been tuned in for this long, you're going to hear me say, and you'll benefit from this, I'm getting crushed in my bond portfolio. Crushed. It's crazy. I thought bond investing was somewhat safe. They go down every single day. It's got me thinking that I should be a stock investor instead of a bond investor. Remember, only 10% of my portfolio is spread across long-term, short-term, and intermediate-term bonds. I'm a little top-heavy long-term bonds, and that's what's getting crushed right now. It's a long-term investment, but it's really enjoyable to watch it go down every day. It's really fun. It's awesome. It's great. I'm actually wondering if it's possible for them to ever go up. It's interesting. Now we'll see. We'll be doing a video where I actually talk about the 6 fixed equity ETFs that I bought through Vanguard. That way you guys can know what I've got. It's around 20 grand. So 10% of the portfolio right now, invested portfolio. That's just what we got because I wanted to start a little bit of bond exposure with the stock market teetering at all-time highs. I think they're really going to perform well when the stock market starts to correct here. So what industry at Teresa Ford? I know financials. Wells Fargo has laid people off recently. You're talking to Teresa there. I've got Larry Massa on the line. I've got Josh Barnett on the line. It's good to see some of these names, man, that I haven't seen in here for a while. Very cool. You kill it every week, Ryan. I love listening to you, sir. Yeah, it's because I work up such a good script. I thank you very much. I love doing this, man. I've got Scott S., financial investor. Always good to learn. You've learned me up more than you know, man. Scott S., man, I got to keep my game high. You know what amazes me, man, is I only bring to the table what I bring to the table, but some of you guys are scary smart, man. I was just talking to Benjamin Levy before, and he's a young investor, man, runs his own YouTube channel, and he was telling me that he's building his own algorithms for stock analysis, and I was like, man, that's killer, man. If nothing else, man, if there's no other value that I get out of YouTube, which there is a lot. I love conversing finances with folks, man, but I love this network and community of folks that are like-minded into achieving financial security. in their future and talking about some of the best strategies to do that. So thank you for that. That's awesome. I've got Scott S. was asking financial investor a question. Bill Williams is right below that. How much of my portfolio should be in a small cap and mid cap ETF? Think about adding. Kind of depends on what you got with the rest of your portfolio. I will tell you what I have is 70% exposed to the S&P 500. An additional 20% is exposed to small cap equities, and another 10% on top of that is exposed to international holdings. Now that is in my employee-sponsored retirement account. So depending on what your allocation is, Bill, I would need to understand a little bit more about your percentages, and don't hesitate to hit me up directly via email and let me know a little bit more, but just be careful. I don't look at the mid cap as being that critical, because you can kind of bleed over or have some overlap between your mid cap and your large cap holdings. Really, the value piece and the large cap piece is very important. Love to see most of the exposure there. But depending on how much you're talking about, what your risk tolerance is, certainly looking at adding a good small cap exposure. And I really like the VB. I really do. It's returned almost 10% over the last, it's got a very, very good expense ratio. And that's VB, the ticker symbol. Please go onto the Vanguard website and validate it for yourself. 0.07 on the expense ratio. So very, very, very low cost of ownership. Get your 10% rate of return and a diversified product offered by one of my favorite product offers, not necessarily brokerage house, but product offer that you can own in your brokerage of choice, whether it be Fidelity, TD Ameritrade, minus Merrill Edge. You can buy it in whatever you'd like. But certainly I would look at VB. That's a really, really good small cap offering there. That may help meet that niche, if I understand your correct question, Bill. So thank you for that. That's awesome. I'm gonna scan down through this list. I wanted to hit Josh Barnett. Hey man, new to the channel. Glad to see some real info without the hype and babying. I'll be following a lot closer. Josh, man, I'll do for you what I've done for everybody that comes on to here, man. One of the very first things I said on the channel, and this is what I meant, man, and I meant it from my heart. I want to empower one investor at a time, man, and you can be just that. If you're getting this information younger than I did at 34, I'm 41 right now. So for the last 8 years, I'm making myself wealthy as a self-directed investor. And there's a one specific reason for that. It's because I invest in the stock market, okay? I don't have a middleman in between Ryan and the stock market taking my money. I don't need that. I don't need some moron in between me and the stock market taking my money while I take all the risk, okay? So just to speak plainly and directly, as if it's just me and you talking right now, congratulations on finding the channel, man. I know we're probably going to be at 10,000 subscribers by the end of the year. I'm very proud of that. That's awesome. I'm humbled at the community that's helped me build this message. But how many people have you ever talked to invest on their own? Okay. Now, if you surprise me and come back and say, yep, everybody I know does it, that'll be one thing. But I can guarantee you that's not the case. All right. For most people, self-directed investing is a scary proposition. Why? Because statistics are out there that seem to want to channel people into the proprietary financial planning institutions. Okay. Watch the news media. You get a kick out of how many TV commercials come on TV trying to funnel people into understanding one thing and one thing only, and that is that they don't have the intelligence to invest on their own. It couldn't be further from the truth. And the more we can expose that how untrue that line of thinking is, the more we're going to end up realizing our goal of empowering individual investors, because they are going to understand that they can hold and own assets that are built to be passive in nature, an ETF, for example, all right? You don't need anybody managing that account. Mutual funds really should be a thing of the past. They really should. You shouldn't have to pay somebody 1 basis point for no reason just to put your money to sleep into an account of holdings that they sell you on the idea that somebody's behind a magic curtain managing and tooling with every day. That's just not the case at all. Why? Because they don't get paid on that. They get paid on the X amount of dollars that are called assets under management. And now they're calling it assets under care. All right. I've done videos in my chronicle on all this stuff. And Josh, welcome to the channel, man. Honestly, pay attention. Don't lose this message, man. I don't charge anybody for my message, man. I don't. Why? Why don't I charge people like everybody else? Because if I started to charge people for the information, it would degrade the very intent of why I'm putting out this message. And think about that for a second, man. That's real talk, all right? It's real talk. If I'm trying to liberate somebody in their own financial lives, then why the hell am I sitting across from you asking for your money, all right? And the difference between me and a lot of folks on YouTube that I notice is I don't need your money, okay? I don't need it, okay? However, you do need this information. You need it. Welcome to the channel. Awesome. So you own Blackstone and a Roth IRA. You don't have to pay taxes, right? That is correct. I've got Larry Massa right below that. That's the beauty of it, actually, is to be paid those dividends. Now, every dividend that I've got, Larry, I've got it re-rolling into the stock. Every single one of my stocks are set up dividend reinvestment. And I was just giving Josh the business, man, about how awesome self-directed investing in it. And that's just one of those examples, man. A dividend reinvestment program in a managed situation is going to cost you money. They're going to charge you for that every single month. Every single month. In a self-directed account, you go in and you set that up, man, free of charge, very simple. It's a setting, man, in the account. And you're not going to get charged for it. Same idea behind dollar cost averaging, man. I was with Edward Jones before. They used to charge me 5 3/4 basis points every single month that I would take X amount of dollars and contribute. I don't deal with any of that garbage anymore, man. All I'm trying to do for you guys is separate the gray matter into black and white. All right. There's one way investing should be, one and one only. If you're the one taking the risk, you should reap all the rewards, all of them, all of them. All right. Best idea to put yourself in a self-directed Roth IRA account to provide yourself with the tax protection from the government, right? So someday you can take the withdrawals out of that account. We earmark 59.5 down the line. Number 2 is we earmark the potential for wealth preservation. And that's a key term on this channel that I invented, okay? And I invented it for a reason. It's because people overlook the importance of wealth preservation all too often when they're looking to set up their investment account. And if you can save on the fees that are traditionally charged within that account, you're going to save hundreds of thousands of dollars going forward, right? That's a pretty wide playing field and a pretty wide profit potential for every dollar that you liberate in a self-directed account, man. Do some studying up on it, man. Talk to your friends, refer them to the channel, man. It's a big, big part of how the channel is growing is through referral, because I've got a lot of really good folks, man, that are putting these programs into place for themselves. And they're going out there and they're recommending it and saying, man, you should check this guy out, man. He's legit. You know, go watch it, man. If you don't like what you hear, you can turn the damn thing off, right? You know, it's done, right? It's not going to cost you a dime, but at least hear it out for a couple minutes and see if this stuff resonates with you. And I think for a lot of people, they look at it and they're like, what? You mean to tell me that I can invest in a Roth IRA and I can keep all the money on my side and I don't get charged anything? That's correct. And you're never, ever going to see it advertised on the television, ever. That's why you need folks like me and you need folks like yourself to share it with your family, all right? Because this stuff is empowering information. It benefits individuals, not financial institutions. I say it all the time, and I mean what I say. Very, very empowering, very powerful, very liberating information, man. And I wish this for everybody. It's not for everybody. It's not. A lot of people will come on the channel, scoff at the message. They'll turn it off, unsubscribe, and they're gone. I could care less. They can go live a peaceful, happy life doing something else. But as far as this niche right here, I'm right. Okay? I'm right. And search it out and validate it for yourself. All right? Cool. Roth, you paid taxes on the money before you put it into the account, right? Yes, that is true, Josh. And keep in mind, man, it just, you don't get to write off the contributions in a Roth, but you got to remember, man, those earned income, that's just the small amount that you've earned. Once you set those dollars free to accumulate, right, on the back end, you're growing. Every $1 that you put away, that $1 is free and liberated to grow to $112. Okay, for each dollar invested, you're liberating those dollars to grow. And then when you decide to take out that $112 or $362, whatever each one of those dollars has grown to, you can withdraw that money tax free. And that's a prospect that is amazing in the future, because again, we're not guaranteed what the tax rates are going to be into the future. And basically what it allows you to do is cap your eventual tax rate at zero, because you don't know what the tax rates are going to be on earnings. And it makes that eligible to be withdrawn at 0%, zero tax. That's a beautiful thing. We try to get to the rest of these questions. I'm actually really happy about, Ryan, how do I contact you? If you're on the Independent Investor channel through YouTube, my direct email is on there, but I will give it to you now. If you have a pen and a paper, you can rewind the video, but I will say it quickly if you, through the channel. As a matter of fact, here, I'm going to put it in the comments. Just a minute. Okay. Yep, I got it. Hopefully that went through into the bottom there. I believe I just dropped it right into the bottom. Yes, it did. That is my Gmail account through the channel. Certainly do not hesitate to reach out to me directly, please. That's I don't mind doing it. I will do it until I can't do it anymore. Honestly, the channel's going to grow. It's going to get bigger, because I've always felt like if you're going to have a YouTube channel, you need to have somewhat of a niche. You need to, all right? There's not going to be a lot of people that are talking about self-directed investing, all right? That's why I like Brent so much. He helps me support this message, all right? And there's hundreds and hundreds and hundreds of thousands of people out there that need to have this information, all right? It cannot be just me spreading the message through referral, right? That's why I support his channel, and that's why I've supported him since the beginning, is because he's a self-directed investor as well. And he knows how important it is, right? We need more. It's that simple. We need more word of mouth, because I very rarely talk to anybody that I run into that really has the first inkling about investing, let alone investing with the prospects of investing on your own and what it could mean for your future. All right. Let me scroll up to the back here. So Teresa, I've dropped my email at the bottom there, my independent investor at Gmail. So you guys can cruise down and get it. Don't be afraid to hit me up directly. No problem. I'm not doing trading or swing trading. It's just my first time in the market. So I'm trying to say I didn't put a lot in it. So I cut my losses if I have to. Boy, stick with the channel a bit, Josh. I think that you're looking at it twofold. When I lost $3,000 when I started. I invested in penny stock. That's why I don't do it anymore. But you know, I mean, I'm up $58,000 this year. So would it have benefited me to cut my losses, never to have invested again? Absolutely not. My charge to you is validate investing. All right. Understand the prospects of compounding interest over time. Validate the importance of diversification. Okay. Okay, Ryan, what is diversification? What product can help me diversify? They're out there. They really are. Low cost ETFs will help you do that. Well, which ones do I invest in? In what allocation? What account do I invest in? All right. I answer every single one of those questions on the Independent Investor channel, and I could continue to talk for another 4 hours. If you're new to the channel, start to kind of get an idea of what a dividend reinvestment program is and why you do it, why you do a dollar cost average program, why I so heavily advocate for having cash on the side for an eventual downturn. This is going to be different philosophy than what you hear from a financial planner who wants every single dime that you have to invest. They don't care if you're eating farver beans out of a freaking can. They don't care, because remember what their goal is. Their goal is to bring in as much money as they possibly can. It is. My goal for you is to expose your money to the stock market at the appropriate allocation. All right. There's a very, very fundamental difference between those two premises, and they're divulging. They really are. I talk about this in my chronicle of videos, man. Go back and check them out. You're gonna start to piece together the message that I've put out there in over 200 videos, coming up on 200 videos. And this topic is infinite. There's no amount of videos that I could ever come out with and run out of topics. Never. Never. That's the beauty of this topic. All right. We'll continue to teach young investors. We will continue to teach older investors. We will continue to teach about diversification, what products are out there, what are the best accounts to use. It's infinite. All right. We try to get to the end of some of these other questions. I'd love to share my pie. If you want to see what I did so far, you can fire it over your M1 pie. That's no problem. I think it's a good start. I think M1's a good account to get up to that, first $10,000 mark or first 50,000, whatever your short-term goal is to get to, but don't get cold feet on the stock market. If you think you're going to get cold feet on this stock market, then pare back a little bit on your exposure. All right. Don't invest every dime that you have to the stock market. Start to save up some cash on the sideline. All right. You'll be glad that you did. And in the long run, you'll be glad that you're not overexposed to the stock market, because I do want you to be able to take advantage of a downturn. I will be, guaranteed. All right. I wish I had 1,000 to put in the market this week. Laugh out loud. I think you're fine, Becky. I do. I think we probably this is going to be short term. I believe. I honestly think this is a sector rotation, fairly normal. I think it's rolling from higher growth technology into some of the utilities play, telecom sector, oil sector, and financials, and finally healthcare. That's where I think the rotated money is going. That's my opinion, but that's what I see. Lydia's in the house. I have 400 I've been waiting to use in my Roth. When I saw red, I was happy, but no new shares for Robinhood until I get paid again. I tell you what, Lydia, if you've stayed with the channel this long, I don't know how old you are. You do have a job, but take my advice. Look into a self-directed Roth IRA account. You will thank me someday. You will. It's the greatest single piece of advice that I could ever give somebody. Leave the Robinhood account alone. You've got a great, great brokerage account built up there, but start to DCA a self-directed Roth IRA account. It'll be the best thing you ever did. Keep the brokerage house, because you're going to need it in the future as well. But you're going to want to set up that passive account. If you've got $400, I started my account contributing with $25. That's what I did. Those accounts are approaching $100,000 each. Now I have two. All right. It's the best advice I can give you. I'd give it to you, and I'd give it to anybody else who asked me for my help. And that is the best piece of advice that I can give on the account. And if it's not something that you've ever heard of before, if you don't know, because I didn't know what the hell it was when somebody introduced it to me, And I was like, oh my God, that's unbelievable. You mean to tell me that I can invest on my own in an account that I don't have to pay fees in? That is incredible. Sign me up, I'm in. And it's been liberating ever since. And if I can get to people like yourself, because the audience that you speak to is different than my audience. And that's one of the reasons why I endorse the channel, right? Because you're speaking to so many people. And if they resonate with your message, it's very, very important that you put this out there for your audience because it's legit. It's legit. All right. Doesn't matter over the short term. I'll still be earning dividends and buying back. I've got Robert Lapointe here, financial investor. I could use some help. Could we, if you're willing, set up an email connection? You bet, man. Brent's good people, man. He's solid. Lydia, I think Robinhood doesn't have IRAs. They don't. They don't. It can work fine as a brokerage account. M1 kind of gives you both options there. But there's thousands and thousands of people out there that started a Robinhood account for the sheer reason of entering into single stock without having to pay an entry and exit fee. It's a really cool disrupting application, man. Lydia knows I'm not a big fan of Robinhood, and that's fine. I'm entitled to my opinion. I just think, starting a brokerage account at the expense of a good retirement account is just is out of order. That's all. So if you've started the brokerage account, go ahead and backfill with the self-directed Roth IRA account, build that Roth IRA up account and let the brokerage account work. It's not going anywhere. I mean, hell, if you sell within a year, you're subject to short-term capital gains tax anyway. So why not keep that at least a year anyway? Let those holdings run. They're not going anywhere. Who cares? You're an investor. It's awesome. I've seen your portfolio. It's quite good. It's good. You should sleep easy. It's fine. You got killer holdings in there, man. But take my advice, man, for what it's worth. Look into it. Yeah, 26 years old, take my advice. No doubt about it. I would have killed for this advice. I mean, I hate to say that, but if I would have had this advice when I was your age, sky's the limit, man. Sky's the limit. No doubt. I use M1 as my Roth. Awesome. I didn't know that. That's perfect. That is perfect. That meets that for you. That's really cool. Fund that up and make sure that you're approaching that max cap for the year 5,500. That's awesome. Well, commission-free trades with the account type you're talking about. Commission-free trades with the account you're talking about? Yes, Tony. So my incentive threshold in Merrill Edge is at $50,000. I've had a lot of people transfer into Merrill Edge. They can offer, X number of free trades. I've heard all kinds of different incentives to get started and get the portfolio built up. I don't recommend a good retirement account on the sole sheer reason of saving a trading fee. Okay. I have well over $100,000 of assets in my account. I trade for free. I do, even in my account. So it's some of those trading incentives that I talk about all the time to keep in mind when you're shopping out a brokerage house like a TD Ameritrade, like a Fidelity, like a Merrill Edge, like a lot of people when they go look at Vanguard. And it's not one that I recommend anymore because their incentive thresholds are super high. At $500,000, they give you discounted trades. And at $1 million, they'll give you free trades. I have free trades at over $100,000. It's the same thing. Okay. It's just the level of trading incentive within that account. So it's something to keep in mind. All right. And I'm not being braggadocious. I'm just telling you, keep that in mind when you're shopping out those different retirement accounts to know I'm not getting you invested in the stock market, Tony, to never get you to these incentive levels, right? I'm not investing you to get to that first 10,000, to that first 50,000, 100,000. All right. I'm assuming you're going to get there. All right. I mean, 10 years of a max funding schedule at 55 puts you at 55,000. That's with zero capital appreciation. Nobody can tell me that that's not possible. If I did it, I started with zero. I was given nothing. I worked for everything. All right. If I can do it, anybody can do it. All right. So if you're at those incentive thresholds, that's where the 30 free trades kick in. And then I've got 100 free trades per month, which is basically virtually free. I wish I could give them away. I would, I wish I could give them away to people through referral. Maybe that's another idea I'll have for Merrill Edge next time I talk to them. But I'm going to try to finish up here. Commission free, what accounts are you talking about? Yeah, that's in my self-directed Roth IRA account, Tony. You bet, free of charge. Switch to M1. M1 is free of charge as well. That is also within a retirement account. So Lydia just talked about her being in one. I've done specials on M1 Finance. You guys know I just liquidated my account within the last couple of days. I brought it back to Merrill Edge. So I'm not with M1 anymore, but it is a broker and a retirement account that I do still advocate for new investors who are concerned with the trading fees. And it is something to acknowledge, especially if you're going to be doing a lot of trading back and forth, which is something I don't recommend. But I'm not your dad. I'm not going to tell you what to do. If that's what you want to do, fine. It's not in line with any investing principle that I put forward. I like to see people buy and own. That's why I encourage people to look at the major brokerage houses first, because if you're doing sound long-term investing, you shouldn't be trading in and out of stocks so much as to justify getting into a brokerage account merely for the purpose of saving your trading entry and exit fees. All right. So I'm going to scroll down here and see if I think I got every question last time. I was a little bit irritated last time. I didn't get to all the questions. I've got Tony here, the last question, and I've got Becky. I know what you're talking about, Ryan. I have Vanguard for my work retirement. Becky, if you've got them for your 401k, they are one of the best 401k companies. So don't misinterpret what I'm saying about, I was actually thinking about switching my accounts over for when I was shopping out the Admiral shares with Vanguard, their Admiral program, and I wanted to know what was part of their Voyager program, et cetera, et cetera. And I thought it was a bunch of fluff. I didn't buy into it one bit. I thought it was a waste of time. So that was just the decision I made. I stayed with Merrill Edge. It was a good decision. I'm very happy with them. But Tony's talking about I'm 20 years old, so I want to go through my life putting in $100 a month into a mutual fund for the next 20 years. What's the best way to go about this idea, and is it a good idea? It is a fantastic idea. Tony, if you can heed my message, all right, you will remember when you came across the Independent Investor channel, because your life will change, no doubt about it. You got to stick with a plan. You got to be disciplined. At times, you're not going to understand why you're doing it, but you got to do it. You got to pay yourself first, all right? You got to get yourself involved in a self-directed Roth IRA account to get that account started for yourself. Start dollar cost averaging that account. You can buy a mutual fund if you want to. I believe there's better options. If you're going to go with a mutual fund, you might as well justify looking into the Vanguard index funds, or better, the best thing I recommend is an ETF for yourself, whether it be the VTI. All right. The Vanguard's total index is going to get it done for you. That'll broaden you out over 3,700 stocks over the total stock market. All right. And that's going to be a great diversified product for you to build up over time. And that way, when you get some financial savvy in the stock market, that'll allow you some freedom and flexibility to start entering into some of those single stock positions later on in life. All right. And with that, guys, I've been going almost 2 hours. So I haven't lost my voice yet at all. But I'm going to try to finish up this last question here from Bill. The 50,000 for Merrill. I lost it. The 50,000 for Merrill Edge to get the incentive is from one account or multiple? It is a combination. It is multiple accounts, Bill. That's an awesome question. Thank you. And if you have those multiple accounts in there, it's a cumulative 3-month balance of 50,000. So that's the detail there, but very, very well worth it to get that incentive. And I've brought people up through those incentive levels, and they're like, thank you, Ryan. I appreciate that, man. Now I trade for free with Merrill Edge, just like I did with Robinhood before. So it is possible, man, to kind of keep that stuff in mind. So K97 says, what's your next vid? I'm going to be coming out with a couple. I have not had time whatsoever. If you guys see that the video upload schedule decreases, you guys are going to have to give me a pass. I do apologize for that, but I'm going to be coming out with my 10 best dividend, stock picks. I'm going to be coming out with my bond portfolio as well. I'm going to be coming out with an idea that I had pushed through the subscriber channel about how to become an investor in your first 30 days and what to do as an investor in your latter 30 days. So from day one all the way through chronicling 60 days of the 10 steps that you take in your first 30 days and the 10 steps you take in your latter 30 days, kind of a progression of exactly what you need to do to go from a non-investor, I don't know anything, to entering into the stock market as a beginner, and then what to expect as an investor. So I'm going to chronicle a 60-day time period and walk you through that. I've got a whole list of ideas to come out with on the channel, that of which I really haven't had time to get to. A lot of other ideas as well. I need to do installation 2 for investing later on in life as well. Yeah, stick with the channel, guys. It's not going anywhere. I'm an investor, okay? I don't mind being patient on an investment. You guys need to be patient with me. In the meantime, deploy some of these ideas. Research and validate the ideas for yourself, okay? You will receive eventual validation. I want to premise to each and every one of you guys who have come into this live feed this evening to join the Instagram feed as well, all right? Through the Independent Investor channel, through YouTube. Get on that Instagram feed, as I'm going to be probably putting as close to daily 1-minute messages up on Instagram that I can. I think that's really going to satisfy a nice niche of summary each and every day, guys. I will sign off now. Please hit the thumbs up button, man. I guess it helps the channel. Thank you for making this one of the most successful live feeds that I've ever had. I'm very satisfied with the content and the dialogue this evening, guys, and I wish you all the best. Good luck next week if there's more volatility to come, or maybe things kind of settle out and we start on this, continuing on with this bull market that we've got going on here, guys. So thank you so much for tuning in. Good luck, guys, and I'll see you next week.